The aim of the fund is to give investors exposure to what is one of the largest equity markets in the world. And by that I mean the US companies that are less than $10 billion in market capitalization. So if you forget about the S&P 500, which is very large companies, our fund invests in companies that are smaller than that. But that equity market in the US is still bigger than the European equity market. So very significant market to have exposure to. We think it will. First of all, we think we'll have positive economic growth. And we think actually next year, 2025, we'll have better economic growth than 24, because it became obvious that before the election, some businesses slowed down investment because they were uncertain about what level of taxation, for instance. But since the election, we've seen that small business confidence has risen very sharply. People expect to be regulated less and taxed less by the Trump government. And that increases confidence, and we think will be positive for the economy. And what's positive for the economy is typically positive for smaller companies, which are very much exposed to the US economy. We would expect earnings growth to be better next year than this year as well. So yes, we think the bull market continues. We think there's most likely more to come in 25. What we should understand is before the rally started, smaller companies were as cheap as they've ever been compared to large cap companies. So really they'd been ignored in recent years as everyone became focused on the very largest companies, the Mag 7. That made smaller companies cheaper. And we think next year, with the focus on the domestic economy from the Trump administration, that those companies will start to grow faster and attract attention. So yes, we would think smaller company rally continues in 25. Well, I think investing in US small caps is all really about two things. First of all, you've got the innovation of the US economy, venture capital investing in early stage companies that then become public companies if they've got a good product or service. So there's always that innovation aspect, typically in healthcare and technology. But then you also have just a very large economy that needs roads building, needs factories building. And so there's a lot of domestic investment that's happening in the US, particularly at the moment. As I say, roads and bridges and infrastructure being fixed, companies relocating to the US. So I think all of those positive domestic things that are happening in the US will be driving the narrative next year. I think anytime you've got an economy improving in economic growth, there's always the risk or the question mark is, does inflation start to go up as well? So I think the debate over inflation and interest rates will be the key risk to markets next year. The Federal Reserve has done a great job in lowering inflation from 8% to around 3%. That last 3% going from 3 to 2, which is the Federal Reserve's target, can be hard to achieve and take time. And indeed, we may see inflation increase a little next year, which will certainly cause some risk in markets around interest rates. So I think that's the most significant issue we'll need to deal with next year. That's a great question. I think perhaps yes. So first of all, what we should remember is that the way the US power is in the US, having the presidency and the Senate and the House of Representatives leaves Trump with essentially a free hand to legislate as he sees fit. So to the extent that he's got aims that he wants to legislate, whether it's healthcare or whatever it may be, he's more likely to achieve them this time than he was last time. So yes, I think we should probably take him literally. At the same time, we know that Trump, say, for instance, around tariffs, can often use tariffs as a stick to beat countries up, to negotiate and do a deal. So mostly literally, but not 100% literally, I'd say. I think the outlook is positive, positive economic growth, positive earnings growth, and an improving economy. I think what we'll be keeping an eye on is to what extent is Trump able to reduce regulations. There's a sense from business owners certainly that over-regulation is stifling their ability to grow. And Trump is certainly promising to deregulate. The other aspect is what tax cuts we see. He's talked about corporate tax rates coming down to 15%. He probably won't go that far, but I think that's worth keeping an eye on. So for smaller businesses, domestic companies, lower regulation and lower taxes will be important, I think, from their point of view.